Good morning, everyone. Can y'all hear me okay?
Yes.
Okay. Do I have control?
I think you do. See if you can advance the slides. If we have any problems, I'll be happy to do it.
Yeah, I'm not seeing.
There's a little bit of a delay, I think, when you advance them, but I am seeing the title page now.
Okay, I don't see it.
All right, just one moment. Let's try something. Give me just a second. All right, I think it's visible now.
Yes. Good morning, everybody. Like Janice said, my name is Fred Crispen. I run the small business lending unit for United Midwest Savings Bank on a nationwide basis. A little bit about United Midwest. We're a small savings bank headquartered in Columbus, Ohio. We're not a traditional lender in that we don't offer checking accounts, credit cards, and the typical banking services that most banks offer. We are a nationwide preferred SBA lender, and we concentrate our efforts in the SBA programs on a nationwide basis. Like I say, I run the small loan division for the bank out of Panama City Beach, Florida, with a staff here of about 25 people. Concentrating in loans for startup and existing businesses from 25,000 or 20,000 rather, up to 150,000. I'm going to give you an overview to this morning of the SBA loan programs, what you can do, and then I'm going to concentrate on the small loan program, which is the division of the bank that I run. Because I would assume that most of you are probably looking at a smaller startup type business and probably looking for loans in the area that I'm talking about. In the meantime, if you have a question about anything regarding it, feel free to let us know, and I'll be happy to answer any questions that I can. In general, SBA loans can be made anywhere technically $5,000 up to $5 million in the program. Most lenders classify the large loan program, 350 up to 5 million, as being the bigger loans. And we call it the large loan program.
Excuse me for interrupting. I don't have control to mute everyone, so if you will please check your phones and mute. I think we're getting a little bit of feedback, and that'll help our audio. Thank you.
In general, SBA does not make loans. They will guarantee a percentage of a loan for a lender. So then in the case of default, SBA will pay a lender anywhere from 50 cents to 85, 90 cents on the dollar, depending on the program and how it was set up. In general, loans from 3 to 5 million, we can loan up to 90% loan to value. A lot of that depends on the strength of the borrower and the type of collateral that's going to be securing that loan. But it's got to meet SBA requirements for fully secured. Any loan greater than $150,000, SBA says we have to take collateral sufficient to fully secure the loan. That means if the business collateral is not sufficient to secure that loan on a discounted basis, then we have to look to personal collateral and take a lien on your personal real estate if there's any equity in that real estate. What kind of loans do we make? We make loans anywhere from on real estate, equipment, working capital. Real estate, we can make a loan up to 25 years, fully amortizing, no balloons, no call options, nobody jerking your chain every 3 to 5 years. Equipment, we typically do 10 years or the useful life. If you've got a piece of equipment that's got a 25, 30-year useful life, then we make an extend that term. But in general, it's a 10-year loan for equipment. And then working capital for 10 years. Interest rates on loans will vary. The maximum we can charge on a loan, 350 and up, is prime plus 2 3/4, and which would make your rate 6%. And you can talk to the individual lender about what they can do there. Typically, on a big real estate deal, if that's what you're looking for, you're going to need more than just real estate. Typically, you're going to want some equipment, some working capital as well. And we would blend the term on that. The real estate would go in at 25 years. The equipment would go in at 10 years and capital at 10 years. We'd blend the term, and depending on how much you use of the various types would determine the actual term on that loan. It may blend out to an 18-year loan or a 22-year loan, whatever it is. The thing you need to remember is that it's a fully amortizing loan. No loans, no call options, money jerking your. Any loan in excess of 15 years under the SBA 7A program has a prepayment penalty, but it's a easily recognized penalty. It's 3% the first year, 3% the second year, 1% the third year, and there's no prepayment penalty after the third loan year on the bigger loans with a term of 15 years or longer. SBA loan over 150 is going to guarantee 75% of that loan, meaning that if the loan goes into default, SBA, we did our job after we liquidated everything, pay us 75 cents on the dollar, 25 cents on the dollar is our capital at risk. Guarantee fees, SBA charges a guarantee fee on these small programs, 7A program, and any loan guarantee fee is 2% of the guaranteed portion of the loan. Above 700,000, it's 3.5% of the guaranteed portion of the loan up to $1 million, and then it's 3 3/4 of the guaranteed portion of the loan over $1 million on up to $5 million. So it can pretty hefty guarantee fees on the bigger loans, but that's to support the program. Why does SBA have guarantee fees? Because the money Congress appropriates does not support the loan program. It's strictly to pay the light bill and the salaries at SBA. The program itself is supported in the guarantee fees that borrowers pay and the ongoing servicing fees that lenders pay on the outstanding balance of that loan every month. Like I say, any loan over 15-year term has a prepayment penalty, but it's an easily identified 5310. 5% the first year, 3% the second year, 1% the third year, and after the third year loan year, there is no prepayment penalty. Okay, I'm trying to figure out how to advance it, Janice. There we go, if that works.
Sorry about that. I muted everyone. I think I took control, but you should be able to do it now.
Yeah, it's not. You may have to do it for me, Janice. It's not letting me.
Can you try again now? I apologize. If it doesn't work, I'll be glad to do it.
Yeah, there we go. Got it.
Okay.
Now if I can get back to the top, here we go. Jeez. That's the overall large loan program. If you have questions, we can talk about it, but it's available to any borrower. Everybody in the room can borrow up to $3,750,000 in SBA loan guarantees. And so you can use that up in one loan guaranteed at 75% for $5 million, or you can have multiple loans guaranteed at various amounts depending on the program up to your $3,750,000. The beauty of the program is that once you pay that loan back, you have that guarantee to use all over again. So you can have multiple SBA loans. You can get a loan for $5 million, 5 years down the road, sell that business, pay that loan off. You can go back and get another $5 million loan. So it's a very versatile program. I'm going to concentrate today on the small loan program because I kind of feeling that's where y'all will be most interested. Under our small loan program, we're making loans from $20,000 up to $150,000 under the 7A program. Loans from $26,000 up to $150,000 require that we take the best available lien on the business assets, but that's it. I'm not taking a lien on your personal residence, your firstborn child, or anything else. If you run the business from your home, that's great. We still don't have to take a lien on it. If you're leasing property from somebody else, we're going to require that you have the ability to stay at that lease for at least 10 years because we're making a 10-year loan. So you're going to either have to have a 10-year lease or preferably a 1-year lease or a 3-year lease with options to extend out to that 10 years. Why do we need a 10-year lease? Because we're making a 10-year fully amortizing loan. There's no fully amortizing, no balloons, no call options. And because it's less than 15 years, there is no prepayment penalty. So if your business is doing well a year from now and you want to pay me off, you can do so without a penalty. We set all these small loans up as working capital for general business operations. SBA charges a guarantee fee. We've talked about that. And under this small loan program, the SBA guarantee fee is 2% of the guaranteed portion of the loan. And under this small loan program, SBA is going to guarantee 85% of your loan. If you're a veteran, we're going to pay half of your SBA guarantee fee for you. So in the case of a veteran, you're only going to have to pay 1%. Some of you may have heard that the SBA's got a veterans program. That's strictly under the SBA Express program, which is a 50% guarantee. The bigger banks, some of them may participate in that program, but it's not something we participate in. We do them all under the regular 7A program with an 85% loan guarantee. What's the benefit of the program, the small loan program? There's less documentation than a traditional big 7A loan because we're not financing real estate, so we don't have to wait around on appraisals, EPA reports, closing, title work, and that sort of thing. Most SBA businesses are acceptable with no qualifiers. Loan to value and other traditional collateral ratios that we look at when we're doing the bigger loans are not part of this small loan program, and it's not part of our underwriting process. So in a lot of cases, the loans that I make under this small loan program are basically unsecured loans because even though we're taking a lien on the business assets, the business has really no assets. A prime example would be a Molly Maid franchise. What are you going to have? a couple of vacuum cleaners and some dust mop and some 409, and that's pretty much it. Not something that a typical lender would be comfortable with from a collateral standpoint. Years ago, we took collateral out of the process under this small loan program and said, you know what? We don't necessarily need collateral, because if we properly capitalize that business and they've done their homework and have set things up properly and have done their homework, they know what they can do, then they can go out and generate sufficient income to pay us back and pay themselves a comfortable living. So we took collateral out of the process in the small loan program. What kind of businesses do we do? I've already said we do startups. Probably 90% of the loans that I fund on a monthly basis are to pure startups. And we're funding on average around $8 million a month right now, with an average loan size of around 130,000. So you can do the math. It's a lot of loans we're funding on a monthly basis under this small loan program. SBAs, and our only requirement is that the day we fund that loan, you got to be ready to open your doors and start making widgets or selling services or whatever it is you're going to do. We don't do any construction lending. We don't do build outs, tenant improvements, and that sort of thing. So you've got to have all that done, have all your licensing in place, and be ready to rock and roll the day we fund that loan. Franchises are okay. We love franchises as long as that franchise is on the SBA approved franchise registry. And you can go to sba.gov/franchise, and it'll take you to the registry, and you can scroll through it. It's voluminous, but these are franchises that the franchisor has given SBA a copy of their franchise documents, their FDD and their franchise agreements, and any other agreements you have to sign. SBA's reviewed them and said, yes, these meet SBA's requirements, and lenders can make loans to these franchises. If they're not on the registry, we can't work with them. What's SBA looking for when they approve a franchise? They're looking at a lot of different things, but there's two primary things they're looking for. One, do you have the ability to operate as a true independent entrepreneur, subjecting yourself to profit and loss just like any non-franchised business would? And then two, do you have the ability at some future point in time to sell that business, sell that franchise, take the profits from that sale and put them in your pocket, or do somehow they go back to the franchisor, or do they unduly restrict your ability to sell that business? We don't do any business acquisitions under this small loan program for a simple reason. This is a credit scored loan program so that we can operate with speed and efficiency. SBA will not let us credit score a business acquisition. We have to do traditional underwriting, get the tax returns on that business, spread the cash flows, apply multiples to come up with determine a true value of that business, and go from there. Our small loan program is built for speed, so we don't want to have to do the traditional type underwriting. So we just don't do business acquisition loans. We don't fund gas stations or other EPA sensitive type businesses under this program. We've already talked about, I don't do construction renovations or build outs. Once you've got all that completed and you've got a certificate of occupancy from the local authority, then we will fund our loan. And individuals with a criminal history have to be cleared by SBA. We call that a 912 issue. And it's a simple form. If it's a misdemeanor, and there's only a couple of them, and none of them within the last 6 months, then typically it's get a copy of the court documents, fill out the form, send them in, and it's something that I can sign off here locally. If it's more than a misdemeanor, if it's a felony, then we will have to get fingerprints, cards along, and now we do it electronic fingerprints along with copies of the court documents. Those have to go to Washington to be cleared in Washington. Export Express. We also participate in a program SBA has called Export Express. If you're exporting goods Then there's a special program we can make you a loan up to $150,000 under. The caveat is the business must have been in operation for at least 12 months generating income. And you must either currently export products or you intend to export products with the loan proceeds. The loan proceeds must help establish or expand your existing exporting activities. Can't use the funds to go set up an operation in a foreign country. It's only for operations here in the U.S. And you're going to be exporting products. We also refinance what I call high-rate fintech loans. You've all seen these guys advertising, not so much here lately, but advertising about how they can get working capital into a small business owner's business checking account within 24, 48 hours. It's a 12 billion and growing market. What they really don't tell you, though, is what you're paying for the privilege of that quick turnaround. Interest rates under those programs will typically range anywhere from 20% up to 50% and higher. Their average loan size is around $42,000. Their terms are anywhere from 6 months to 1 year. And in most cases, payments are taken out of your business checking account automatically on a daily basis. SBA requires for me to justify to refinance a loan, I only have to beat their payments by 10%. That's not real hard to do at their interest rates. If you take an example of a $50,000 loan at a current rate of 30%, 1 year term, the payments on that loan would be $4,874.36 a month, or $58,492 a year, versus an SBA loan at $50,000 at prime plus 3.25. Your rate would be 6.5% today. It's a 10-year loan. Your monthly payments would be $567.74 a month, or $68.12 a year. Huge savings on a monthly and an annual basis. So we can refinance those loans. If you're already in business and you've gotten involved in one of those type loans, we can justify taking you out of it and saving you tons of cash flow to your business on a monthly basis and an annual basis. A little bit more about our small loan program. Interest rates, loans from $20,000 to $50,000. The interest rate is prime plus 3.25, which would make your rate today 6.5%. Loans from $51,000 to $150,000. The interest rate is prime plus 2.75, which would make your rate today 6%. Under the Export Express program, loans from 20 to 150 are all at prime plus 3.25. Which would be 6.5%. You may ask yourself, why would I do an Export Express for 150 when I could do it under the 7A program? Under the 7A program, anything over 26,000, I have to take a lien on the business assets. Under the Export Express program, I do those loans up to 150,000, totally unsecured, no lien on the business assets or anything else. The only thing you're required to do is personally guarantee the loan. But you're going to have to personally guarantee any loan you get under the SBA program, and typically with any bank loan you go to anymore. The old days of unsecured credit without a personal guarantee is basically gone. Packaging fees. We charge packaging fees on all our loan programs, but under the small loan program, we get no fees up front. If we approve your loan, then we'll take that packaging fee and net it out of your loan proceeds and wire you net funds. You never give us a check up front. If we don't fund your loan, you don't owe us a dime. Loans from $20,000 to $50,000, we're going to charge 3%, not to exceed $550. $51,000 to $100,000, 2%, not to exceed $1,000. In any loan over $100,000 up to $150, 2%, not to exceed $1,500. We talked about the SBA guarantee fee as 2% of the guaranteed portion of the loan. And in your case, as a veteran, we're going to pay half of that guarantee fee for you. Startups less than 1 year in operation, SBA is going to require that we document that you put 10% of the total capital needs of the business into the business from your own personal savings. The way the SBA calculates that's kind of weird. You would think on a $150,000 loan, that would be $15,000. That's not the way SBA looks at it. To arrive at SBA's formula, take the loan amount you're looking for, divide it by 0.9, and at the very least, that would be your total project cost. The difference between your loan amount and that total project cost would be your 10% equity. So on $150,000, it works out to you're putting in about $11,660 of your own funds into the deal. Loan payments will be set up on an automatic draft basis, back with whomever you bank with in your local market. Remember, even though we're a national bank, we don't offer checking accounts, business checking accounts, the typical banking services. So you're going to continue to do business with the bank in your local area. We'll wire the money into that business checking account. We'll draft the loan payments monthly out of that business checking account. One thing to keep in mind, that part of the CARES Act, any loan that funds between now and September 27th of this year, the first 6 monthly payments of your loan will be made by the SBA for you. So you don't have if you funded a loan today in July, your first payment won't be drafted out of your business checking account until, let's see, January, February of next year. So that's kind of an advantage for borrowers closing loans right now under the CARES Act. How do we approve these loans? I mentioned already that we credit score these small loans. We use the Fair Isaac Small Business Scoring Model, better known as liquid credit. I've been using that model since 2003 in these small loan programs. SBA adopted this same model about 4 years ago, and now all loans 350 and below get scored in the Fair Isaac Small Business Scoring Model. So it just kind of validated what we have been doing for a long time. What's that model looking at? It's looking very heavily at your personal payment history, your personal credit. Fair Isaac wrote the book on credit scoring years ago, and after many years of looking at business loans and evaluating loans with lenders from all over the country, they decided that the #1 predictor of how a small business will pay its bills directly ties back to how you pay your personal bills. Pay your personal bills on time, you'll transition that into the business. So it's looking very heavily at your personal payment history. But that's not all it's looking at. It's also looking very heavily at what's the industry risk of the industry you're in. In other words, it's going to look at a startup restaurant entirely differently than it looks at a startup veterinary clinic. Why? Have you ever seen a startup restaurant go out of business? Absolutely. See them every day. Here today, gone tomorrow. How many times have you ever seen a veterinarian go out of business? Very few. It's got one of the lowest default rates of any industry out there. So it's looking at what's the risk of the industry that you're in. It's looking at how long have you been in business. Businesses that have been operational 2 years or less go through a startup module, which is tougher than the module that somebody that's been in business more than 2 years goes through. Why? The highest default rates on small businesses occur in those first 2 years. So it's looking at that. It evaluates the number of accounts that you have. How much have you ever borrowed in the past? Have you ever borrowed $150,000? Those are the types of things that we look at as a lender as well. It evaluates what percentage of your revolving accounts are available to you. Are you maxed out on all your credit cards, or have you got some fallback room that you can help bail yourself out one month if you got in a pinch? It looks at how many people, and this is really important, how many people has actually pulled your credit in the last 2 years? Have you been out shopping a lot for credit? So be cognizant of that. Every time you someone pulls your credit, it'll knock your credit score down about 8 points. Other things that we look at as a lender are debt to income ratios. In general, your household income should be sufficient to keep your debt to income ratio at a 40% or less. So we look at that. Anything over 50%, we get real concerned, and it's almost an automatic decline, unless there's some offsetting factors, i.e. you've got 700,000 sitting in an IRA or 401k, then that would be a mitigating circumstance on that high debt to income ratio. Comparable credit, if you ever borrowed that much, we don't pay as much attention to comparable credit from military, especially young guys just now getting out of the military, because you haven't had a chance to save up. You probably never had to buy a house because you were always living in base housing. And you haven't had the ability to save a lot of cash in the form of savings and IRAs. So on veterans, we'll cut you some slack right there, and we take that into consideration. Application process is pretty simple for us. We have an application that's a PDF fillable form. You can download it from our web link at smallsba.com. That'll take you right to our landing page where you can download the PDF loan application. If you're a single owner business, it'll be a 3-page loan application. The first 2 pages are about the business, and page 2 is really nothing more than a listing of the officers and directors of the business and the ownership. And then page 3 will be your principal information page. Anybody that owns 20% or more of the business has to complete one of those principal information pages. That's all we need initially to get you loaded into our system, pull credit, score it, and approve that loan. Typically the same day that we get that loan application into our office, we will have loaded it up, scored it, and either approved it or denied it. If we approve it, then we'll assign it to a packager. That packager will be in touch with you. Most of the time they're going to call you first and get some basic information over the phone so that we can fill out some forms, send those to you through DocuSign so you can sign them electronically, get them back to us, and then she'll email you a checklist of everything else we'll need so that you can assemble that information, get it back to us in a timely manner. We can fund loans in as little as 10 days. Startups typically take longer, and especially right in today's environment, we've been besieged with loan applications. So we're hiring people as fast as we can. But in general, startups typically take about 30 days from the date we get started, because in a lot of cases you haven't already set up your corporation or LLC or partnership or registered a DBA if you're going to operate as a sole prop, those types of things. So startups take a little bit longer, but we work with you to get everything in place to get it done. Everything we do is electronic. We don't keep paper documents. So as you get the documents into us, they're going into an electronic file. Once the packager has all the information in the file, she'll hand that file off to the underwriter. The underwriters will review everything for compliance with SBA and to make sure that the projections that you put together for us make sense. Part of the things we're going to give you is an Excel spreadsheet to do 2 years worth of projections. If you've already done projections, then you can take your numbers and drop them into our Excel spreadsheet so that our underwriters are looking at the same thing on every loan file. They're not having to look around at different people's projection formulas. So We use electronic signatures on everything. Once we get through with underwriting and they sign off on it, they'll hand it off to closing. Closing will finish up your file, crank out your closing documents, send them to you back through DocuSign. Once again, you'll sign everything electronically, get it back to us. We check it. Either my son or I sign off on it electronically, and then we upload it to the home office at night, and the following day, wires come out into your business checking account there locally with whomever you bank with. Financial projections, I just told you, we're going to give you an Excel spreadsheet. It's already set up in a format so that my underwriters are looking at the same thing. So the packager will help you with that if you've got any questions, or you can always pick up the phone and call us or the folks at the VBOC. They can help you with as well. One of the things we're going to require that you do in those projections is pay yourself. You got to be able to, if that business can't generate sufficient income to pay you a salary commensurate with what you were making in the past, then all you've got is an expensive hobby. You got to be able to pay yourself. So we're gonna make sure you take care of that in those projections in a sufficient amount to maintain your debt to income ratios. Ineligible businesses, things we can't do. We can't make loans to nonprofit. SBA is only for for-profit entities. We can't make loans to passive income businesses, i.e. apartments, house rentals, that sort of thing. It's got to be for an owner-occupied, owner-operated business. We can't make loans for you to speculate in real estate, buy raw land, sit on it, flip it down the road, buy old houses, fix them up, rent them out, and flip them down the road. We stay out of the ag business. I'm not a farm lender, so I don't know that much about it. So we pretty much stay out of that. Although there are gray areas there that if you've got a business and you're not sure, give us a call and we'll tell you whether it's something we can do or not. You can't use SBA funds to go set up an operation overseas, only for operations here in the good old US of A. Doesn't mean you can't be an exporter or an importer. You just can't take the money and set up an operation in a foreign country. We don't make loans to religion or religious-based type operations, not under the SBA guidelines, and we don't make loans to businesses that were sexual in nature, i.e. strip clubs, adult video stores, those types of things. Businesses engaged in lending or gambling or pyramid sales are not eligible under the SBA loan program. Businesses that restrict patronage, not eligible under the SBA loan program. What I like to use there, an example, is Curve's fitness facilities. Back when they first came on the scene, they were not eligible because they restricted patronage to strictly females. They wouldn't let us guys into place. So they weren't eligible for SBA loans. They're now on the SBA approved franchise registry with an asterisk by their name. They have to provide the lender with a schematic showing that they've got changing facilities and restroom facilities for both sexes. And they've got to certify that they will be open to anyone, regardless of gender. We can't make loans to lobbying or lobbyists. We can't make loans to people that make their living packaging SBA loans for lenders. Business, and last but not least, business or owners who have defaulted on any government guaranteed loan or direct loan of any kind are not eligible, never will be eligible for another government loan of any kind unless you go back and make restitution to the government. So if you default on a student loan, an SBA loan, a USDA loan, any kind of government loan, then you will never be eligible for another government loan of any kind. Now, FHA, VA loans do not count under that nomenclature because those loans are sold in the secondary market and basically they're considered quasi-governmental. That's a quick down and dirty overview of the SBA loan program in general, and our small loan program, loans up to 150,000. Like I say, you can apply online at smallsba.com. Our toll-free number is right there, and there's somebody there to answer your questions. If you have questions, you can always contact the VBOC. They do a wonderful job of helping guide you through putting business plans together and doing projections and that sort of thing. We work very closely with them. Or you can pick up the phone and call me anytime. My direct dial is 850-249-6886. And I'll be more than happy to work with you in any way I can. Are there any questions at this point? Janice? Janice, are there any questions from anyone?
Okay, sorry about that. I had a phone and a cell phone going. So anyway, I apologize for that. I think that Jamie had a question she put in the chat box. It's for a new business. Can my investment already in the business be deemed part of the equity investment?
Absolutely. Absolutely. All we have to do is document that those were your funds and that you had them prior to putting them into the business. They're not borrowed funds. You can't borrow money for your equity injections. So in other words, you can't use a home equity line to get your equity to go into a business. It's got to be out of savings, 401ks, IRAs, that sort of thing.
Okay, very good. I'm just now seeing the chat again, so let me see. There was a question about EIDL loans, the EIDL, and I believe that as of yesterday or just recently, the government no longer has that funding available. Do you have any more information about that?
Now, I've read the same thing myself this morning on our National Government Guaranteed Lenders website that the EIDL program was over with.
Okay, and for the PPP, I believe that there's still some money there, but the application time frame will end this Friday. So in that case, people needed to have already been involved with that loan application process.
Right, yeah, go to your local bank would be my suggestion. We pivoted back out of the PPP program about a month and a half ago. We covered all of our borrowers that wanted funds and then pivoted back to doing just regular 7A loans.
Okay, I know that one thing a lot of our VBOC clients ask us is what do they need to have ready to take to the banker? And of course, you know, you gave us information about an application and that's great. But for financial projections, should they get typical loan or the three main financial projections for 1 or 2 years? Is that at all helpful?
2 years is what we're going to require. So yeah, if you've already put projections together, then we're going to give you our Excel spreadsheet. You can just take your numbers and from whatever format you've done them in and drop them into our Excel spreadsheet. If you've already done them, you've got a leg up on it. It won't take you no time to convert it over.
Okay, good. One question is there a formula or guidance that one can use to calculate the amount to borrow for a small business?
Now that's really, people ask me that all the time. Well, how much will you loan me? Well, my question back to you is, how much do you need? I'm not going to cut your loan short under this small loan program. You're going to score the same whether you're borrowing $20,000 or $150,000. Size of the loan really doesn't affect how you'll score in that small business model. So I would never call you back and say, hey, look, I'm not going to loan you 150, but here's 100, because then all I've done is give you enough money to get in trouble and not enough money to get the job done. So it's how much do you really need to get that business open, get it through the ramp up stage, because your sales in month 1 are not going to be the same as your sales in month 6 or 7 or 8. We hope it'll be a gradual ramp up. So in the meantime, you got to have enough working capital to be able to pay the bills for the business, be able to pay yourself a salary so that you can keep the rent paid or the mortgage paid or your car paid. So you got to take all of that in consideration when you're trying to determine how much you want to borrow.
Okay, that makes sense. Another question is, if I have a DOD contract, but I need funds for salaries, can I use the contract as collateral?
And once again, we'll take a lien on the business assets. I don't need to take a lien on your contract. But yeah, we make loans to small contractors all the time to give you the ramp up money you need to get those salaries going, because it's going to be typically 90, 120 days before you get paid. I don't care what they tell you.
Yes. You've certainly provided a lot of great information. Anybody on this call, please speak up if you'd like to ask a question. This is an excellent opportunity because these are the kind of questions that almost every business owner will ask us at some point. You know, what you're already giving us has been really wonderful information. Let's see if I've got any others here. Well, I have a question. You mentioned about the guarantee fee from the SBA. Right. Was there something recently that waived that? I thought we saw something that talked about a permanent waiver of a guarantee fee on certain types of loans.
That's on the express loan, 50% guarantee.
Okay.
And we don't participate in that program. We participate in the regular 7A program and it's got a 2% guarantee fee. And for several years, SBA was only requiring veterans pay 1% of that guarantee fee, and we were paying the other 1%. SBA a couple of years ago quit paying quit waiving the 1%, and we said, well, we've been doing it, so we'll just keep eating the 1%. So rather than the veteran having to pay 2%, they only have to pay 1% under our program.
Wow, that's a generous benefit. That's a great thing, because 1% adds up.
Yes.
Do you have any particular recommendations about software? I know a lot of our clients, when they're just getting started, they're wondering, you know, is there a software that works out well as far as like for banking or for loans, for tax purposes? And I know that, you know, there's several on the market, but is there anything that you find that works better as far as working with a banker?
Not really. I mean, most of the software packages out there today, whether you're using QuickBooks or Peachtree or whatever, are set up in formats that most bankers can look at and see. I mean, like in our case, we're just going to give you initially that 2-year Excel spreadsheet, and you're going to put everything into there. As you get on down the road, you need the ability to keep good records, and whether you have an accountant do that for you or a bookkeeper do that for you or do it yourself, it's entirely up to you. At the end of the year, under an SBA loan, and even under a regular conventional non-SBA loan, any banker is going to want to see your tax returns at the end of the year. And going forward as a business, as you try to go borrow money, keep in mind that banker is going to want to see your tax returns. The old days of good old boy lending are out the door. Regulators require that we justify any loan we make, whether it be an SBA loan or a conventional loan. And the way you do that is with tax returns. What did that business show in income, revenues, and expenses and net bottom line over the last year, 2 years, 3 years? And most lenders are going to look back 2 to 3 years. And in our case, if you're an existing business, you're going to sign a little form from me called a 4506T. And that gives me the ability to go to a third-party vendor and get a copy of your IRS tax transcripts for the last 2 years or 3 years, if you've been in business that long. And I'll get them both on the business, and I'll get them for the last year on you personally. Why do I need your personal? Because if you tell me in that loan application you have $100,000 in household income, and I've driven my debt to income ratios off of that $100,000 income, I expect to see that you told Uncle Sam you had $100,000 in household income. So all lenders are looking at that. And that's just part of lending in today's world. IRS transcripts, to me, or I call them the poor man's audited financial statements. You're not going to tell Uncle Sam you made more money than you actually did.
Right. Okay. That's good. Somebody asked a question about company assets, and if they have a $1,200 computer they want to use as an asset, where could the other collateral come from? I'm not sure what kind of business that is, but I'm assuming this is one that's probably already existing.
Yeah. We'll take a blanket lien on that. When we fund a loan under this small loan program, we'll file a blanket UCC on all the business assets. The only time I'll list a particular asset is if it has a value in excess of $5,000. A computer is not one of those type things. Typically, it's not something we're going to come get in a liquidation.
Gotcha. So it's probably just a great idea, if you're not already doing this, to save every receipt from everything, any documentation, because
Absolutely.
that could definitely be a way to show that you've already put your 10% equity injection into the business if you've been buying equipment.
Absolutely, absolutely. And the your accountant's going to want that too, because as you buy that equipment, you're going to need to set it up and depreciate it.
Right. Okay. Let's see, we've got a couple of other questions. What guidance can you share on selecting a good solvent bank to, one, do business with, and two, to seek for a small business loan? So I guess what are some of the things you look for, the qualities in the bank?
Yeah, read the paper, see who's been doing good things and who's been doing bad things. Most banks now, if they're a national bank, they're your deposits are insured, so you should be okay. A lot of banks will tell you that they make SBA loans, and they might make 1 or 2 SBA loans a year. If they're not a preferred lender, then question that, because they're not going to be able to process that loan as quickly as a preferred lender could.
That's good information. I think with all the advertising and clever marketing, it gets a little bit confusing. Maybe not as much on TV and radio anymore, but what we see on social media. And it seems like if you think about a bank, all of a sudden there's an ad for a bank on your social media. So it can get a little bit confusing there. Fred, do you have any information about any new banking services on the horizon, or any new loan products for businesses? Anything that you think is going to happen and be a disruptor?
Not really. But I've heard rumors about maybe some extensions to the PPP program. It may be some extensions to that payments being made by the government for your first 6 months being extended beyond that September 27th date. But outside of that, I mean, it's the normal stuff you see and read in the papers every day.
Okay, very good. I know we have a lot of people starting new businesses because perhaps they had been working, and since the COVID-19 crisis happened, they're looking at other ways to support themselves. So I think we have a lot of activity going on with our clients, looking at starting a new business or maybe expanding, definitely pivoting if they've been doing something that they can't do now. So your information has been extremely helpful, and I'm so glad that you donated your time to us and to the clients and veterans in Florida, and we'll be happy to share this with everybody after the presentation. Now, I did put your LinkedIn page and your bank's page and our VBlock page all in the chat box.
Okay, cool.
And I'll follow up with everybody with an email afterwards. We also have a brief survey that we'd like to get some feedback on, because that helps us know how we've done and how we can better serve you in the future.
And
One of the things
if anybody else has any questions, please unmute yourself.
Janice, let me add one other thing. For people looking at new businesses to start, make sure you keep in mind in today's environment what kind of business you can open right now without having to operate under a sequestered environment, i.e. bars and restaurants in some states are being shut back down again. So how are you going to be, do you have ample space to be able to seat people outside in the case of a restaurant? Or can your restaurant operate at 50% capacity, as in the case in Florida and some other areas? So those are the types of things to think about in today's environment. SBA requires that any loan that we open right now, we have to address the business's ability to operate in today's environment.
Well, that's interesting. I did not realize they were asking for that documentation, but it definitely makes sense because in today's environment, everybody's got to figure out how they will pivot either now or in the future because changes have definitely occurred.
Yep, absolutely.
All right, thank you very much. Well, if there's no other questions, we will end this recording and share it with everyone later. Thank you so much again for being part of our day, and we hope that we've answered a lot of questions for everybody.
Thank y'all.
Thank you. Bye-bye.